Coach Matt here for Tackle Trading. Now, typically we do go live with the halftime report, but unfortunately today we did get hit by some technological difficulties out of our hosting online hosting platform Zoom. We are trying to get those resolved here shortly, but unfortunately it's not going to be in time for the halftime report here today. We will be back live tomorrow, as we always are, on YouTube tomorrow, same time at 12:30 p.m. Eastern Standard Time, 10:30 a.m. Mountain Standard Time. I did want to do a quick little video just kind of detailing what's happening in the market today for our amazing halftime crew, because I know you guys missed us there live today. So very quickly, not going to take an hour here. Just going to quickly update you guys on what's going on in the market. First and foremost, I wish we were live today, because I do believe we're going through a major catalyst right now that could be very important. And this is kind of the area on the chart I've been waiting for this retracement to come into. So in terms of looking at the market is still short-term slightly bearish, with a bearish retracement coming back up into resistance here. And you're really coming into that, Goldilocks type retracement that we have talked about in the past during the halftime report. You have a strong level of support right here at 2600. Now, I want to talk very quickly about the retracements. When you're dealing with a bearish retracement or a bullish retracement, there's certain key levels that you're looking at. First and foremost, to have a retracement, you have to have lower lows, lower highs. We certainly have that in a lower low, lower high. So that's step one. Step two, you don't have to have it, but you want to see increasing momentum to the downside. And so when you're looking at the velocity of this movement to the downside and then this movement to the downside, you have increasing momentum to the downside. That's a powerful momentum indicator that this market will go down from here, or not from this moment, but in terms of the overall trend will continue to move in the direction of the greater trend. Number three, you want to see a little bit of a retracement coming back up into those resistance catalysts. Now, what could those resistance catalysts be? Moving averages, trend lines, previous pivots, significant whole numbers, and Fibonacci retracement levels. And I like to kind of see the strength of that overall resistance level by giving it a different point factor based on how many different levels of resistance it is coming into. First and foremost, if you're looking at your moving averages, you're in between two now lowering moving averages, as you now see in the 20-day moving average downward, 50-day moving average down, where this is what we call a bear zone, is what we call it. When you have downward moving averages and then the price gets in between those, bear zone, typical, we'll see slowing momentum and then a downward movement in prices, which is what we want to see next. So it's in your moving averages. Is it at a trend line? Well, let's go ahead and connect some dots here. You got a trend line right there, and then you have a trend line, your horizontal pivots there. I don't see it at any degree of trend line. Is it at previous pivots? Well, here's your previous pivot at 2600, which is also a significant whole number. Is it at a Fibonacci retracement level? If we go ahead and look at our Fibonacci retracement level right here, go ahead and draw from the peak to the very bottom, and you're sitting right smack in that 50 to 61% Fibonacci retracement number. And so you're at, your moving averages, you're at a significant whole number, you're at a previous pivot point, and you're at a Fibonacci retracement level. So let's go ahead and erase those. I was just kind of showing you different levels of resistance at that, but you're at a very important overall resistance level right here at 2600. And if it does get back above 2600, I think you could go into a neutral case overall for the marketplace, but it's got to get back up above that level first and foremost. Now, there's not a lot of news on the day here today. We do have a little bit of Fed speeches, but not a whole lot of actual activity from an economic perspective that impacts this market. So a little bit of a slow day from a volume, a little bit of a slow day from a price action. I mean, it is up 22 points so far. That's a good day in a normal market, but this market, that's not even an average trading day in terms of its ATR. So as this is approaching that resistance level, you are seeing some momentum into that. So you're not looking at saying, okay, I'm just going to short it simply because it's hit a very strong level of of resistance. That's not what confirms the retracement. What confirms the retracement is a downward movement in price after slowing momentum. So we do have every data point that looks at a bearish retracement here. Probability is down from this level in my opinion, but all bets are off until you get confirmation. No retracement is a retracement without confirmation. So keep an eye on how the market performs at 2600. I do believe it closed above 2600. You should see price appreciation, but again, we got a long way to go between now and the end of the market trading day. So that's on the and you're looking at that same type of pattern on the Nasdaq, S&P 5, Dow Jones, and the Russell 2000. Very quickly, let's look at some of the other major markets. Looking at the dollar. Now, the dollar broke its support level. We talked about it 2 days ago in the halftime report. That broke and closed under 96. I said then, I'll say it again, that the next likely direction is down from that as we now have a short-term bearish downtrend in the dollar. Now, a lot of the price movement that happened on the dollar today wasn't just technically driven. You did also have major news coming out of the Bank of Canada, and the Bank of Canada announced its interest rate policy today, and they kept the rate at 1.75. Some had expected a 2.0 range. It did come in at 1.75. A lot of slowing growth and the concerns about trade, over the course of the last 30 to 60 days has obviously weighed on a lot of these central banks. The U.S. has capitulated to a certain extent. Now Canada has capitulated to a certain extent. So with them keeping their overnight rate at 1.75, when some expected a little bit of an increase, you did see the dollar sell on that news as the Canadian dollar, looking at the USD/CAD here, as the US dollar depreciated pretty aggressively against the Canadian dollar, a continuation of what we've seen over the course of the last week as more and more people started believing that the Bank of Canada was not going to be raising interest rates in the face of slowing global growth. So that obviously that's going to when a currency has some degree of expectation that it's going to increase the interest rate, well, when they don't increase the interest rate, you will see price appreciation coming into that currency, and thus the dollar goes down and the CAD goes up. Typically speaking, dollar goes down, CAD goes up. What does that mean? That means gold, silver, and your precious metals. Let's take a look at silver here. Silver, even though the dollar sold pretty aggressively, silver's had a forming a little bit of a high base. Obvious resistance here, in my opinion, at $16. Now, I'm not looking to trade silver here because I'm still looking for it to retrace back down or potentially break out of 16. This price movement is obviously over. You just got to wait for a better setup, which is again above 16 or a retracement down into a rising moving average or around that $15 mark that we talked about for months and months and months. Gold, on the other hand, is forming very, very similar to silver. You have obvious resistance here at 1300. A close above that is a new trigger above, but as we are in the high base, there's no real trading here. Look for a retracement or perhaps a breakout of that high base type pattern. But to me, the news of the day is crude. That's the news of the day for me, and you're seeing trend reversals here now. I wasn't a buyer here, wasn't a seller either. This was a shorting opportunity under 50 on the break of the low base, but as it's coming up into these resistance levels, at no point did it confirm. Now you're back up above that 50 level. I got to go back to neutral on crude oil at this point. You're forming a little bit of an inverted head and shoulders, slowing momentum in the trend, coming back up into that resistance channel right there at about 52.5 to 53, but it slowed down at 50 and then it broke with some strength here. So at that point, I think you got to go back into neutral on crude and perhaps start thinking about maybe some buying activity, some more naked puts, covered calls on USO. All of those are back in play as crude gets back up above that $50 mark, and you can't deny the volume that's been coming in to crude over the course of the last week either. So you had narrow body range candles here, but as it's approaching that $50, never did we get that confirmation, and now we're back into that neutrality rating on crude oil. And then just for my brother Tim, the VIX, Market's up, VIX is down. That's how it works. Now, keep an eye though on that $2,600 price level on the S&P 500. Keep an eye at $1,300 on gold. Keep an eye on $16 on silver as well. And then, as we discussed, we're back into that neutrality on crude. So I hope you guys. Well, first of all, I apologize we couldn't go live today on the halftime report. Hopefully this satisfied your thirst for the halftime report for today, the 9th of January of 2019 it is. And this is Coach Matt for Tackle Trading. And Tim and myself will be back tomorrow, same time, same channel on YouTube.